Welcome to another episode of Market Brief After Hours. We're wrapping up a very busy Monday, and there is a lot to unpack, from shifting geopolitical dynamics to leadership changes in Europe, and some eye-opening moves in the currency and crypto spaces. The global markets are showing a lot of moving parts. Let's start with Wall Street. It was a slightly down day across the major indexes, wasn't it?
It was. We saw a cautious start to the week, with the major U.S. indexes closing slightly lower. The S&P 500 fell 0.19% to close at 7,443. The Nasdaq Composite lost 0.05% to end at 25,508, while the Dow Jones Industrial Average took the biggest hit, dropping about 307 points, or 0.59%, to close at 51,839.
What was the main drag on the Dow?
A lot of that downward pressure on the Dow came from Apple, which saw its share slide more than 2%. But the broader market sentiment was really dictated by what was happening overseas, specifically rising oil prices, driven by escalating military exchanges between the U.S. and Iran.
Right. Geopolitics is front and center again. The U.S. completed its 9th consecutive night of airstrikes against Iran, but there was a brief moment of optimism earlier in the day, wasn't there?
Yes, during the London session, investor sentiment actually improved after the Iranian foreign ministry spokesman suggested there was still room for diplomacy. He mentioned that intermediaries were continuing to exchange messages and that negotiations could be pursued based on national interests. However, that optimism faded after President Trump posted on Truth Social, warning that Iran would pay for the deaths of 3 U.S. service members many times over. That statement, combined with the Houthis in Yemen declaring a maritime embargo on Saudi Arabia, pushed oil prices right back up.
And how did oil react to all of this?
Brent crude, the international benchmark, gained about 1.3% to settle at $89.22 a barrel, while U.S. West Texas Intermediate crude rose 0.9% to close at $83.23. Oil prices are now up roughly 20% just this month.
It's a massive move. And what about the technology sector? We saw a massive sell-off in chip makers last week. Did they manage to find any footing on Monday?
They tried to stage a recovery. Micron Technology led the way, climbing almost 2%, while Astera Labs gained 1.9% and Teradyne rose 3.5%. Advanced Micro Devices was also up 1.6%. But even with those gains, the VanEck Semiconductor ETF was only marginally higher. Many market strategists are pointing out that the semiconductor and AI trade is undergoing a healthy reality check. Technically speaking, we're seeing some deterioration that increases the risk of a deeper pullback toward longer-term support levels, like the 200-day moving averages.
Let's shift our gaze across the Atlantic to Europe. It looked like a pretty mixed bag over there.
Absolutely. European markets closed mixed after a very cautious session, with investors also keeping an eye on the upcoming European Central Bank monetary policy meeting. The pan-European Stoxx 600 ended down 0.3%, and the UK's FTSE 100 shed 0.71%. On the other hand, Germany's DAX and France's CAC 40 managed marginal gains, while Switzerland's SMI dropped 0.82%.
The UK is also dealing with some major political shakeups, with Andy Burnham taking over as Prime Minister. What's the market making of his initial moves?
Burnham is actually Britain's 7th Prime Minister in a decade, succeeding Keir Starmer. He immediately made waves by signaling a willingness to use flexibility within the existing fiscal rules to boost public investment. He insisted he'd remain prudent and ruled out a complete rewrite of the fiscal framework, but he's clearly looking for wiggle room. In a surprise move, John Healey was named Chancellor after Rachel Reeves indicated she is leaving the government entirely. Despite the political transition, UK consumer sentiment actually rose to a 4-month high of 43.4 in June, showing that people are feeling a bit more confident about their personal finances.
That's a silver lining for the UK. Meanwhile, in Germany, we got some new inflation data, right?
Yes, Germany's producer prices rose for the 3rd consecutive month in June, up 1.8% on a yearly basis. That is a bit slower than the 2.2% increase we saw in May, but it shows persistent pressure, largely driven by a 5.1% jump in intermediate goods and a slight rise in energy prices.
Now, before we head over to Asia and dive into the currency markets, let's take a quick pause for a brief message from our sponsor. And we are back. Before the break, we were looking at Europe, but the Asian markets also had a highly dramatic session on Monday. What stood out to you there?
Well, Japanese markets were closed for Marine Day, but the big story was in China and South Korea. China's Shanghai Composite climbed 0.85% to 3,796, but that was only after the state-backed national team of funds reportedly stepped in to buy around $9 billion worth of stocks to stabilize the market after a brutal sell-off on Friday. Hong Kong's Hang Seng Index also surged 2.36% to 25,143, led by tech giants like Alibaba and Baidu.
But South Korea didn't fare nearly as well, did it?
Not at all. Seoul's KOSPI index plummeted 4.46% to close at 6,516. Investors heavily sold off artificial intelligence and tech stocks due to growing concerns over China's rapid advancements in the AI space. Heavyweight Samsung Electronics and SK Hynix both dropped over 4%, while LS Electric lost 5.6% and Hyosung Heavy Industries plunged 9%.
That is a massive hit for South Korean tech. Now, let's pivot to economic data and the fixed income markets. We saw some interesting inflation numbers out of Canada.
Yes, Canada's headline inflation slowed down more than expected in June, dropping to 2.8% from a two-year high of 3.2% in May. This was largely due to a slower rise in gasoline prices, which fell to 20.5% growth compared to over 33% in May. Crucially, the Bank of Canada's preferred core inflation metrics, the median and trimmed mean rates, both fell to their lowest levels in over 5 years, coming in at 1.9% and 1.8% respectively.
Meanwhile, in the U.S., the economic indicators and Treasury yields are telling a slightly different story.
Indeed, the U.S. leading economic index edged down by 0.2% in June to 99.1, pointing to some weakening in consumer spending. Over in the bond market, Treasury yields moved higher as investors watched those Middle East tensions. The yield on the benchmark 10-year Treasury note rose over 5 basis points to 4.594%. The 2-year Treasury, which is highly sensitive to Federal Reserve policy, gained over 3 basis points to 4.211%, and the 30-year bond yield rose to 5.115%.
Let's talk Forex, because we saw some key technical levels being tested on Monday. Can you walk us through the major currency pairs, especially where they stand relative to their moving averages?
The Euro-USD pair extended its lower trajectory today, closing down 0.21% at 1.1416. It traded in a tight range between 1.1449 and 1.1402, closing near its lows. Technically, this pair is in a very clear bearish trend. It is trading well below its key moving averages. The 50-day simple moving average is at 1.1522, the 100-day is at 1.1582, and the 200-day is at 1.1638. Sellers are firmly in control here. If we get a daily close below 1.1402, it could open the door to much lower levels.
And what about the British pound? It seems to be holding up a bit better technically.
It is. GBP USD pulled back slightly today, closing down 0.13% at 1.3434. But unlike the euro, the pound remains positioned above its key moving averages. The 50-day SMA is at 1.3377, the 100-day is at 1.3400, and the 200-day is at 1.3398. This cluster of moving averages around 1.3400 is providing a really strong cushion. As long as it holds above that level, the broader bullish structure remains intact, and this dip looks more like healthy profit-taking.
Now, the Canadian dollar had a big domestic data point today, with inflation slowing down more than expected to 2.8% in June. How did USD CAD respond to that?
The slowing inflation, which was driven by easing gasoline and food prices, gave the Bank of Canada more room to breathe, and that weakened the Canadian dollar. As a result, USD CAD rallied 0.33% to close at 1.4065, right near its session high of 1.4066. This was a very strong bullish response, finding perfect dynamic support right at its 50-day SMA of 1.3990. It remains well above the 100-day at 1.3857 and the 200-day at 1.3851, reinforcing a very dominant uptrend.
And let's not forget the Japanese yen. USD JPY seems to be consolidating at some very high levels.
Exactly. USD JPY closed up 0.09% at 162.50, trading in a very narrow range. This is tight consolidation after some massive gains. The pair is in a strong, established uptrend, sitting comfortably above its 50-day SMA at 160.62, its 100-day at 159.64, and its 200-day at 157.40. A break above today's high of 162.59 could easily trigger another leg higher.
Let's switch over to commodities, starting with gold. Gold has had a tough run lately. Is there any sign of a bottom?
It's trying to build a base, but the technical damage is severe. Gold closed down 0.30% at $4,006 today, trading between a high of $4,040 and a low of $3,982. The metal is trading significantly below its major moving averages. The 50-day is all the way up at $4,301, the 100-day is at $4,550, and the 200-day is at $4,478. While the downward momentum has slowed into a horizontal consolidation, it remains a heavily bearish structure overall. Holding above $3,982 is absolutely critical for gold right now.
And silver?
Silver staged a minor bounce today, closing up 0.85% at $56.38, but it ran into selling pressure at the intraday high of $57.48. Like gold, silver is deeply suppressed. It's trading well below its 50-day SMA of $68.19, its 100-day of $72.88, and its 200-day of $69.73. So today's gain is really just a temporary pause in a dominant bear market.
Understood. Now, let's wrap things up with some of the individual stock movers of the day. Crypto-exposed stocks had a massive session, didn't they?
They absolutely flew. Bitcoin climbed to a one-month high, which triggered a massive rally. Galaxy Digital and Mara Holdings both surged more than 9%. Riot Platforms and Circle Internet Group jumped over 8%, while MicroStrategy rose more than 3%, and Coinbase gained over 2%.
Any other standout gainers?
IREN, the data center operator, exploded over 19% after raising its year-end AI cloud annualized run rate revenue target to over $4 billion, thanks to securing $2.8 billion in new multi-year contracts. Hut 8 also popped 10% after signing a 15-year, $9.8 billion lease to commercialize its 1-gigawatt data center in Texas.
And on the losing side?
SpaceX shares fell more than 3% to a fresh low, even though they announced another Starship launch attempt for Thursday. And Penguin Solutions dropped over 11% after Barclays downgraded the stock to underweight, setting a price target of $40.
A highly dynamic start to the week, to say the least. That is all for today's episode. If you find this useful, please follow Market Brief After Hours. We'll see you next time.